What's going on, good people? Welcome back to another episode of the Trading Challenge. Today is day 6, April the 14th, 2023. We made some trades today, so let's get into it. Okay, so coming into today, I still had a sour taste in my mouth from Friday because I took losses that, I feel like some of them I should have had to take, but some of them were unnecessary. So this weekend I did a lot of back testing, and from that back testing I learned one thing: only take the setups that I know, because if I stick to what I know, I have a much higher probability of being profitable. So let's talk about today's session and what went down. So coming into the session, we had this zone established from the pre-market starting at about 8:45, and that zone held up all the way until the market opened. And then of course volatility came in at the open. But if you look right here at 9:30, when we started, we pushed back up to the top of the zone and tested it twice on both of these long tail candle wicks right here. So that's showing us that the range was still being respected. And then we pushed all the way down. We broke past the range, but we came all the way back down to not yesterday's closing price, but Friday's closing price. That's what this orange line down here represents. But as soon as we got to that closing price, we immediately reversed off of it and came right back up to the top of the zone once again. So those three touches right there solidified that the zone was going to hold up throughout the rest of the session until it broke. So with that knowledge going forward, I was like, okay, if I see a zone, I know how to trade it. You either short it from the top or you go long from the bottom. So those are the scenarios that I started looking for, which led me ultimately to trade one, because we see once prices spiked through and came to solidify the zone once more, we came back down to the bottom of the zone, respected it as we should. But then look at what happened after that. When we shot to the top of the zone, we had a breakout. Now, you always have to be skeptical of a breakout in the zone, because if the market has been doing one thing for so long, the probabilities of that one thing continuing are higher than the probabilities of the market situation changing. So once I saw the prices break out on this first green candle above the zone, I was like, okay, that's interesting. But then immediately on this next candle, they gave everything back. The buyers gave everything back that they were able to do on that one candle. And then that selling continued on the next candle, which is where I was able to get in short. And I just simply took the trade back down to the bottom of the zone and got out. Now, it did end up going back to yesterday's closing price, but because I'm not too familiar with trading with the closing price, I don't necessarily want to take it all the way down there. I use the closing price as a reference point for a trade that I'm already in that I believe could reach that point. But if it's a profit target that comes before that level, I'm willing to take off my position. But that's only because I trade one contract. In a situation, if I traded two, I will be able to short it at the top of the zone, short two at the top of the zone, take profit on one at the bottom of the zone, and hold the other one for a possible swing back down to yesterday's closing price. So that's just a little note that I can keep to myself to remember whenever I start trading bigger size. So after that one trade, we saw prices make a double bottom on yesterday's closing price. And where did they come back to? Right back to the top of the zone once again. And look at what happened. We pushed past the zone, came back, retested it, and then pushed higher. So that retest might have a lot of traders in the market saying, okay, the range is over. But me, I was thinking, if prices spiked up higher and then immediately reversed on the candle before and came back down to the bottom of the zone, shouldn't they do the same thing? It's not guaranteed that they do the same thing, but like we said earlier, the market has been doing one thing. Why would we try and go against it and predict something else? Let's just trade with what we see, and let's trade in line with that. So I had initial thoughts about going short at candle A, but you guys see what happened. It was a huge spike all the way back down to the bottom of the zone, and it was super quick. It was probably maybe 5 seconds, and it happened as soon as I thought about taking the short. So clearly, I guess I wasn't the only one thinking about that, and other people in the market actually acted on it. Now, after we got that spike down, Let's come back to letter B on top of this candle right here. I also had an opportunity to go short right here, but I passed up on it because I said, okay, if prices came down, tested the bottom of the zone, and came back and closed on top of the zone, shouldn't that be more of a bullish type of price move? So I was thinking that, but I'm like, if we just had that type of selling, the reason that prices came back up to this point again was because you had a whole lot of traders taking profits within this entire candle, which pushed prices back down, back up to candle B. So it should be one last test to see if the downtrend was really as strong as we thought. And we got that test, but I still skipped out on that trade because I just wasn't quite sure. And remember today's goal, we only wanted to take setups that we know. So even though I kind of felt it, I wasn't as completely sure as I was on trade number one. And also, I would say that because of the losses that I took on Friday, I was a little bit skeptical overall throughout today's session. And I think that's also one of the side effects of having bad losing days, is that going forward in the future, your confidence might be affected a little bit, because I'm not going to say that I should have took trades A, B, C, and D. We're about to get into C and D. But not that I would take all of them, but I should have been able to take at least one of these trades. It's 4 potential trades: two short trades at A and B, and then two long trades at C and D. So that's something that I want to work on. I want to work on just my belief in my overall strategy, because all of these things that I marked up on the chart, they all worked today, and I could have made good profit, or more profit, if I would have been more confident. So that's something that I'm definitely working on this week, is believing in the setups, taking them when I see them, and being able to accept the risk that's going to come with it. That was my problem today. I didn't want to give back the gains that I made on trade number one. So that's something to work on for me. But let's continue with our analysis. So after candle B, when we had that test back down, we came back up, retested the zone once again at the top. And also, that's another concept I want to discuss before we get into trade C and D. Let's talk about range bound consolidations and how sometimes they're not exactly as perfect as we want them to be, but they're good enough to trade. So let's start with our initial zone that we created from the pre-market from 845. That zone did hold up throughout the session, but we also established multiple zones. So I would say we have a zone on top of the zone, right? So if we go from this price right here at 34,100, where we have these multiple tops, we have 1, 2, 3, and 4. That's a zone on top of the zone. But then let's come down to the bottom. We do have that closing price from Friday's session, which in fact created a zone below the zone, where we have prices from 34,030 all the way back up to 34,050. So the zone is not always perfect, because remember, we trade a 1-minute chart. So you got to think about people on the 5-minute chart. To them, the zone might have been from here to here. So always keep that in mind, that a zone might not necessarily be perfect, but it can still be tradable. So after we got that push back up to the top at the zone on top of the zone, we came all the way back down into the original zone for the short trade, where all the sellers could have took profits right here. We had a push back up and then a retest of these lows down here for the zone below the zone. And once we touched that level down here, we started this channel that we can see, this uptrending bull channel. Now on trade C, I was very skeptical, because I'm looking at it like this. We had the top of the day, we had the high for the day right here, a lower high, another lower high, another lower high after that, and then another one that follows after that on this red candle. So even though we were creating the channel, I was very skeptical, because I said, which one is it? Is it lower lows and lower highs, or is it a bull channel? But because of the zone, I should have said that a trending move will be, it's not that it can't hold up, but it's less likely to hold up when the market is range bound. If it's been range bound before, a lot of attempts to break out and start trending will fail. So that's what I was thinking about at point C, but I was just like, nah. But like I said, that's something I gotta work on. And then look at trade D. We got another touch, which was probably the best entry of the day because we had a channel that held up perfectly. It came back up to the top and then it came back down to the bottom. And this was a situation where not only did the bottom of the zone act as support, but the bottom of the channel acted as support as well. So when you get two different setups that cross over each other like this and have the same entry point, it doesn't mean that the trade is guaranteed to work, but it does mean that the probabilities are a lot higher. And that's because you not only have range bound traders going long down here, but you have traders that like to trade bull channels also going long down here. So it's just more people on the long side, which gives you a higher probability of making money on that trade. So overall, I would say today was okay. I made some profits. That's a good thing. But because of the missed opportunities, I feel like I should have been a lot better. And I have some things to work on. And going forward, that's what I'll do. So I appreciate you guys for tuning in. Let's check back in tomorrow at 9:30 and let's run it back.